Why is Warren Buffett selling the stocks? Berkshire Hathaway sold and reduced 11 positions, and here is a big why. Berkshire Hathaway went on a selling spree, substantially reducing some major positions and completely selling 6. What is going through Buffett's head? What is the reason behind this move? Hello everyone and welcome back to Investing with Antoaneta. You can call me even Tony. Warren Buffett has been making some interesting moves lately. And you know me, I like keeping a close eye on what the big players are doing. Just a quick reminder before we begin, please remember to hit the like button and share this video with your friends if you like my content and want to see the channel grow. When it comes to the YouTube algorithm, every little bit helps. So, in today's video, we are going to take a look at the latest changes to Berkshire Hathaway's positions. Okay, well, selling spree may be a bit too strong of a word here, but they are definitely doing a lot more selling than buying. Before we get into the logic behind a lot of this, let's have a look at the portfolio changes. Berkshire has sold or reduced 11 stocks and bought or added only 9. The sold ones are Pfizer PFE 100%, Barrick Gold Corporation Gold 100%, JP Morgan JPM 100%, this is banking, PN Financial PNC 100% banking, M&T Bank MTB 100% banking. They completely sold these 5. Now they reduce US Bank Corporation 0.62%, Apple AAPL 6.05%, General Motors GM 9.38%, Liberty LILAK 10.22%, Singer Energy SU 27%, and Wells Fargo WFC 58.84%, another banking. And from a value investor point of view, these moves are already looking strange, but this isn't just any investors we're talking about here. Buffett is known for his tendency of holding onto stocks for as long as possible. And he's also someone who has held many bank stocks in the past. Yet, he sold or reduced this JP Morgan, Wells Fargo, PNC, and M&T Bank Corporation massively. What would make a value investor who claims that his favorite holding period for stocks is forever suddenly sell out of so many major positions? Well, let's take a look at the buyers. Maybe they could help shed some light on his situation. What did he bought or added? Verizon Communications VZ 151% 45 Telecom, T-Mobile TMUS 117.23%, Kroger KR 34%, Merrick & Co MRK 28%, Marsh & McLennan MMC 26%, AbbVie ABBV 20%, Bristol Myers Squibb BMY 11%, Chevron Corporation CVX 9.55%, Restoration Hardware RH 1.42%. So, what we're seeing here is transition away from banking into pharma and telecommunications, even though Buffett himself hasn't openly stated why he's doing this. We can piece together some of his reasoning if we look at the bigger picture. Let's look at the economic climate. The economy isn't doing so well. We know that for a fact. We've got lower production. GDP is lower than what we had for the last 2 quarters of 2019 and Q1 of 2020. Lower earnings. The SP 500 earnings are downtrending. business closures. Then you also have all of the businesses that had to close down during the lockdown, and a lot of them were forced to transition from temporary to permanent closes. Higher stock prices. While all of this is going on, stock prices are going up. The SP 500 PE ratio is over 40, more than double the historical average, and Schiller is over 35. This indicates that even though the economy is doing poorly, investors are optimistic about the future of businesses. Now, as most of you know, Buffett's investing style is based in Benjamin Graham approach. He is one of the Graham famous quotes about buying stocks. Buy when people, including experts, are pessimistic, and sell when they are actively optimistic. And just like that, it is all starting to make sense. You've got an unfavorable economic climate, complete with low interest rates and tons of free money, which just make the situation even worse. Also, got a lot of investors worry about the future of the economy. I've made a couple of videos about this not too long ago. The links are in the descriptions below as usual. But long story short, people are worried that a new Great Depression may be coming. And what happened during the last Great Depression? Most banks fell. That is what, as a matter of fact, Buffett himself had to bail out Goldman Sachs last time. While we're on the subject of crises and crashes, it's also worth mentioning that the market crashes usually happen about once every 10 years on average. Sometimes they may take a bit longer than 10 years, sometimes less, but the historical average is once every 10 years. The last time we had a real crash was back in 2008, and no, the 30% of 2020 don't qualify because things bounced back before the situation came out of hand. So, we have a health crisis, a shaky economy, overvalued stocks, and a lot of digitalization. All of these are potentially dangerous for banks, but not so bad for telecommunications and pharma. And so, Buffett is moving away from the banks and transitioning to telecoms and pharma. Mystery solved? Well, kind of. It's still mostly speculation on my part, but it's very interesting and potentially important either way. And now, if you really enjoyed this video and found it helpful, please don't forget to let me know by giving it a thumbs up and sharing it with your friends. Or, and if you still haven't subscribed yet, feel free to go ahead and do that. I would really appreciate it. It helps my channel grow. So thank you very much. Until next time, stay very motivated.